crypto moves in seconds. Miss the pump, lose forever. BitProfits never sleeps.
With thousands of members winning daily.
While you hesitate, we profit. Join the elite now.
All right, guys, very special episode for you guys today. I had a very eventful weekend myself. As you guys know, I am a professional poker player. And today I want to talk about the similarities between poker and trading and how I'm able to essentially do both and pretty much do both at a high level and what makes me different from a lot of other traders. Y'all might, you might follow a lot of other trader influencers on social media and on YouTube, but anybody can click buttons on a screen and have some wins and have some successes. It's a different level when you got to go out to a new city and be on a battlefield against other people that you don't know how they play, you don't know how they construct their range. It's a different level. But I just want to kind of show you guys how the skills are transferable between the two. Okay. So this weekend I played a poker tournament in North Carolina. It was the Cherokee main event. Means that there were about 1,200 entrants in this tournament. 1,200 people. Let's do some math, right? Let's do some math. 1190. There was 1,190 entrants into this poker tournament. Every single person paid $1,700 to enter this tournament. This created a prize pool of over $2 million. Okay, over $2 million. Actually, first place, I can go and look at we can go look at the payouts and stuff like that. But first place for this tournament was actually $280,000 for this poker tournament. Okay. Now, unfortunately, toward the end, I had a bad run of cards, but I finished 21st out of almost 1,200 people. So if I'm telling you about risk management and equity and all this stuff, believe me, trust me, we're going to talk about today how these skills relate to trading. Okay. But I wanted to start with that. Just a little bit about, like I said, you guys can go on Hendon Mob. Hendon Mob is a database, and I'm going to link it in the description below. You guys can go and check my stats. So, I'm not just some run-of-the-mill, poker player or whatever, or trader that's just making this stuff up. Hendon Mob, they track every single professional poker tournament around the world, not just the States, not just UK, not just, Asia, around the world. Okay. So you guys can go and check that out. What is the similarities between poker and trading? Well, I would say that the first one is they're both finance disciplines. So what do I mean by that? They both have math-based skills. So for example, in trading, you want to obviously make money without blowing the prop account. You don't want to lose the prop account. Let me pull up a challenge really quickly so you guys can see the challenge rules. Right? So in trading, you want to what? You want to make 8% without losing more than 5% in a day and without losing more than 10% overall. So there's a balance there between wanting to make money without losing money, right? And we see the same skill in poker where you want to gain poker chips, right? Or gain cash, or if you're playing a cash game, you want to gain other players' chips without losing your own chips, without losing your own poker chips. You want to make money, you want to make chips without losing your own chips, right? So it's very similar, okay? Very similar. See, in poker, we call this equity realization. This is a finance term. It's called equity realization. Equity realization in poker is the ability to get the showdown. So that can mean you have like a value hand, right? It's not like super premium. It could be something like relatively pocket tens, pocket sevens. It's a pair. It can beat a lot of weaker hands, but it can't beat premium hands. So you want to realize your equity by just making it to showdown and being able to win the pot without risking a lot. That's called equity realization. We also have equity capitalization. And this is when you want to capitalize and you're competing for the dead money. This is where your bluffs come in, right? This is when maybe you spot a player, they're super passive, and you just want to steal their blinds and take the money, the dead money, the ante, and the big blind and stuff like that. This is called equity capitalization. So in poker, it's always a dance between realization and capitalization. It's like a seesaw. If you look at a seesaw on a playground, it's like a fine balance. You want it to be balanced, right? You want to be balanced. And honestly, this is how I built my poker game is about keeping a balanced range. You never know if I have a really good hand. You never know if I have a bad hand because I'm playing them the same. I'm playing them to where my opponent cannot read me and read what I have. Okay. But you guys see that, right? You can visually see that you want to make 8% without losing more than 10% in a day. Okay. So it's very similar to poker. Okay. The next thing that kind of leads into our next thing, and we kind of talked about it on the chart, and I will show you on the trading view. And you can kind of see the bonk is like kind of like really it's probably about to come up here and retest. Come up here and retest. Probably will keep going down. But the next they have in common is risk management. So in trading, we talk about your risk reward, right? You want to risk $1 to make $3, right? Everybody understands that you have to have a defined risk and you want to have a defined risk and you want to have a good threshold between what you risk and what you put and your potential gain, which is your reward. Okay. We get that in trading, right? Very easy to understand. Now, in poker, this is very similar in poker because this is one of the biggest mistakes that I see new players make is that they risk more chips than necessary to win the pot. This is one of the biggest mistakes that I see a lot of poker players make, and I'm able to exploit this a lot. They risk more chips than necessary. If there's $10 in the pot, they're over betting the pot, which is a mistake because it's a mistake because when you do that, for the price that you're presenting, you will only run. Yeah, it might work a couple times, but the time that it doesn't work, you will get stacked. I will stack you. Somebody like me, I will stack you because you're risking. There's $10 in the pot. Maybe the blinds and the ante. There's $10 in the pot. You start over betting. You're betting $30. You're betting $40 to win $10. If you notice, this is the same as our risk reward, right? They're risking $40 to win 10. They have a negative R return. It's the same exact thing. So when I see this, I'm like, oh, okay. When I spot this out, I'm like, he'll get it in bad. That player will get it in bad. They will make a mistake. And when I have a premium hand, a premium holding, I know they've already risked too much. So I'll just min click it. I'll min click it. I'll make it just a little bit more. Make it just a little bit more where they have to continue. Why do they have to continue? Because they're getting such a good price to where they can't fold. You know what I mean? They have now they made the mistake. They bet 40 to win 10. So now I make it 80. I make it just 40 more. It's just 40 more to win the entire pot. Now they have to continue and they start to slowly but surely they start to compound mistakes. This is probably the number one mistake that I see a lot of poker players make, and it's the same mistake I see a lot of traders make is that they risk more than necessary. And that's the same as over leveraging in trading. If I have this 100K account, let me go back to it. If I have a 100K account on Bitfunded, what does that mean exactly when we talk about risk and having defined risk? Now, if I have a 100K account on Bitfunded, am I trading the whole 100K at any given time? No, absolutely not. You only should trade about 20, no more than 30%, really ideally 20% of that account. You only want to be trading about 20% of that account at any given time. Why? Because you don't want to risk more than necessary. It's the same exact thing as poker. Okay. So number one was finance discipline. Number two was risk management. The third thing is emotional discipline, guys. Emotional discipline. I see it all the time. In poker, we call it tilt. That's where the term tilt comes from, is that you lose a big hand, the cards didn't go your way, and what happens? You get tilted, you get angry, you get upset, you get frustrated. And guess what happens? Every single hand you play after that experience is negative. Everything becomes negative. Oh, the dealer is after me. The deck is after me. These players are out to get me. You're tilted. Okay. So you and playing at a professional level is like it's different because when you start playing main events and stuff like that, everybody is good. Everybody is capable to put you in a tight spot. So you have to control your emotions by force. You cannot. I look pretty upset here, but I look pretty upset. But I probably I'm probably maybe I took a beat. Maybe I'm thinking but you cannot wear your heart on your sleeve in poker, and neither can you do it in trading. In trading, the market is going to give and take, and you have to control your emotions in trading. Let's go back and look at that chart on Bonk. We see how much chop it is. There's a lot of what the first thing I noticed is that there's a lot of room to be wrong here on this chart. It's a lot of you might have been like, yeah, it's going long, then it's going short. You see, we're breaking through VWAP here. It's just a lot of room for error on here. So you can't have maybe you took a trade on a lower time frame, maybe it went against you. You got to cut it and you got to move on to the next thing. Okay. So the third skill is emotional discipline and controlling your emotions. Okay. The fourth thing is patience and selectivity. Let's talk about that. In poker, winning poker players wait for the right range of hands to have controlled aggression. We wait for the right setups, as you can call it. As a trader, we'll call it a setup. So what does that look like for a poker player? What you're looking at on my screen is a hand matrix. This is essentially like a range of hands that you should play in any given position. So, and on this chart specifically, it's saying that you should play the ones in red. Everything in red is what your range of hands would be. And ideally, you want to play these range of hands the same way. So if you're at the bottom of the range, pocket fours, you want to play them the same as you would as king queen. Okay. So that's ideally what that means. So your bet sizing should be similar. All your tendencies should be similar because if you're my opponent, you should not know whether I have this hand or this hand. Notice how this is at the bottom, this is at the top, but they're still in range. They're still in range, so you have to approach them the same, okay? So that's kind of how we build our ranges, as we call it in poker. Now, in trading, this is very similar to trading because what happens in trading? We have setups, right? We have setups that we wait for. We patiently wait for our setups to hit. One of my setups, as everybody knows, is the RSI plays and reversal plays. What does that look like? Well, on this bonk play, we can see it was coming down, coming down. We got to 30 RSI. Here, we started to cross back over 30 RSI. So that is a sign of a reversal. Now, if we jump to the higher time frames, it does kind of contradict here. And like I said, I did say it was probably going to come up here, retest, and reject this VWAP. But that is a reversal play. That is a reversal. So the point is being patient and selective and waiting for poker in your range of hands or in trading, waiting for your setups to come and not just taking trades based on feelings, based on emotion, just because you're bored. I see a lot of new traders doing that. They just enter a trade because they're bored or, they have the day off, which is a mistake. You have to be patient and you have to wait for your setups. Number 5, the next thing is pattern recognition. Okay. A good poker player will be able to spot patterns. What are these patterns? Betting patterns, behaviors. Maybe when you're strong, you have a certain action that you do. Maybe you look to the right when you're strong. Maybe when you're weak, you look left. Maybe you put your head down. Whatever it is, poker players are trained to look and spot these patterns. We call them tells, right? Oh, you're giving off a physical tell, a physical action that you're doing that can lead me to deduce that, okay, when you do this, you probably have a strong hand. When you do this, you probably have a weak hand. And therefore, when you do that, I will respond in a certain way. Does that make sense? So in trading, We do the exact same thing, but on the charts. In trading, we're reading price action, right? We're recognizing patterns. We're recognizing chart patterns. Like before, I said, um, I call it a double bottom, or here's like a double top. So in trading, we're doing the same thing. We're looking for patterns of behavior of the market. We're spotting this. How does it what is the relationship between that and the key level? Is it gonna bounce? Like here, we see it was rejecting off of a level. Here we see it bounced off a level. We're recognizing these patterns. And when we see this, we know how to respond. Okay, if bonk breaks down and it gets back here, maybe I will prep for a long because maybe it will bounce. Maybe it will get to this level and it will break down. I'll prep for a short. But it's the same thing. It's being able to recognize the market behavior, reading the price action, reading the market sentiment. It's the exact same thing. Okay. Next thing, adaptability, guys. As a professional poker player, especially playing poker tournaments, there's so many different factors. There's so many things happening at one time. New players will come to your table. Money is going in the pot. Money is leaving. The stacks are changing. Everybody's stacks is getting, some people are getting chips, gaining chips. Some people are losing chips, right? So the dynamics are always changing, always evolving. And when that happens, you have to evolve, right? Maybe the player to your left is super aggressive and he's getting a lot of chips. Maybe that will cause you to open tighter. Maybe you can't play all the hands you want to play. You have to respond in a tighter fashion. Maybe you can only respond by playing premium holdings because the guy to your immediate left has a lot of chips and because so he has position on you, he can put you in a tight spot. That's the same thing in the market because in the market, you have to adapt to ever-changing market conditions. If we jump down to the 1 minute chart on Bonk, I'm sure we will see a lot of noise. We'll see it going up and down and chop and sideways. Look at this. How do you trade this? It's always changing market conditions, and you have to be adaptable. It's okay to be wrong. Like I always say in poker, right? You can do everything right and still lose. That's the beauty behind it. That's the interesting thing of it. And it's the same thing with trading. In trading, you can have the right setup. You can have everything. You can think, oh yeah, I think the trade is going to go this way, and you can still be wrong. So it's being able to adapt to what is the market giving me today, and how will I respond to that? Okay. The next thing, number 7, strategic aggression. Good poker players have what we call strategic aggression or controlled aggression. What does that look like for a poker player? Well, in poker, we talked about the range of hands, right? Range of hands. So we'll call this top of range, we'll call this bottom of range. A good poker player will have controlled aggression when they spot their opponent making mistakes and getting money in bad. We will now three bet. We call it three betting. Three betting is when you raise. When they put money in the pot, we're going to raise them. And that's having controlled aggression. We're going to make them put more money in the pot with something that is not as premium as our holding. Okay. It's called controlled aggression. In trading, this is the same as trading because in trading, you're going to have what you call high conviction plays and having your setups. And when you get a high conviction play and you see the perfect optimal setup, what should you do? You should take that. You should take your high probability setups and really only your high probability setups. But also, if you are in profit, you can size up, especially on a prop account. That's how you see a lot of our VIP traders getting 10K, 20K payouts is because they started off by getting base hits, building the account. And now you remember how I said, okay, if you have this 100K account, you start by trading 20% of the account. But now, as you are in profit, right, and you have some margin, now you can start trading 30% of the account, not 40, 50, 60%. No, now you can start trading 30% of the account. So now you can see, okay, you were trading 2 10Ks, you were making 1,000. Now you can trade 3 10Ks, and now you're making 1,500 per trade. You see what I'm saying? So being able to size up the right way and scale up the right way, and it's the same thing as buying the challenges. You might start off with 1 or 2 50Ks, But now as you pass and get payouts, now you can scale up. But we'll get to scaling. But it's just being able to have controlled aggression and being able to say, okay, I have my high probability set up. I'm gonna take it at a higher rate. I'm gonna be able to size up on my highest conviction plays. Number eight, the next thing, next skill that poker and trading have in common is volume, guys. Volume. All right. Now let's talk about poker tournaments specifically, right? There is a lot of variance in poker tournaments, right? There's so many players, there's so many different factors, right? It's hard to finish first place in a poker tournament. It's hard in any poker tournament. It's hard, right? So I believe that to overcome the variance of poker, you have to put in more volume. You have to play more poker tournaments to get the results that you want. Okay. That's just a fact of life. And it's the same thing as trading. The biggest thing that I see with new traders, they'll come in here, they'll come get a prop account, they'll blow that prop account, they'll fail the challenge, and they'll say, oh, this whole thing does not work. And I look at it, well, how do you know it doesn't work? You haven't put in the volume. You blew one account. I mean, anything could have happened. You don't have enough data to make an informed decision if it works or if it doesn't work. We don't know if you're a good trader or not trader, or you just had one trend go against you. We don't really know because you haven't put in the volume. And honestly, at first, I didn't even like Bitfunded special and let me go and find it. At first, I didn't even like Bitfunded's Black Friday sale. But as I think about it now, it actually was a really good creative way to give new traders an opportunity to get a payout. Like I said, the biggest mistake I see a lot of new traders make is that they get one account, they blow that account, and then they say, oh, this whole prop thing, oh, it doesn't work. Prop firms are too restrictive, blase, blase. And nah, you really haven't put in enough volume to know if it works. And that's number one. The first thing I would say is that you got to go in the locker room, come to our VIP Discord, and connect with other traders that are doing it at a high level. That would be my first advice. The next thing is that you have to find a deal like this where you can buy 3 challenges and get another 3 free. Now you have enough accounts to where, okay, you can try this setup, you can try this strategy, you can try different things and see what works for you and what does not. You can lose an account but still have room to win. You can arbitrage or hedge some accounts. There's so many creative ways you can do to get funded and to get paid. But if you only have one, you don't have enough volume. We don't have enough data to know if prop firm trading is for you. Does that make sense? So that's number 8 is volume. So number 9. Number 9 is that both trading and poker are based on probabilities. Okay. I can look at this chart and say, hey, I think this is going to happen. It's a high probability that given what we see between it breaking down through VWAP, we had a VWAP reclaim, we had a MA cross, we have increasing volume to the downside. Based on all those confluences, there's a high probability that this trade goes down. Could it go up? Absolutely. It absolutely could wake up and do something crazy, but it's based on probabilities giving all the data, right? And that's the same thing with poker. With poker, you have bits and pieces of information. You never have the full picture, right? You can't see your opponent's cards. You don't know what they have. You can only go based on what they've done in the past. You can only go based on, what they've shown you from behavior to their bet sizing to all these different factors. You always have imperfect information. You always have imperfect information, but it's still based on probability. I still know that if I come in here, I play my range of hands how I'm supposed to play them, and I play my premium holdings the way that I'm supposed to play them, I know that there's a high probability that I'm going to win the pot. Does that make sense? If I'm playing pocket kings versus 9-4 offsuit, there's probably a good chance that pocket kings is going to win. Does that make sense? It's a high probability that hand is going to win. So that's number 9 is probabilities. They're both based on probabilities. We have imperfect information. And if you think about it, that's really how life is. You just never know. You can have a job that you don't know if your job is going to retain your employment next month. You don't know if AI is going to take your job. We live in a world full of as much technology and data we have, we live in a world full of imperfect information. Okay, think about that. Last but not least, number 10 is that they both require solid fundamental bankroll management. Without adequate bankroll management, you will not survive. Okay. In poker, in poker, there was 1,190 people in this tournament. Everybody, besides the person who won this tournament, everybody at some point tricked off their chips, including me. Everybody lost their chips to one person that was the last man standing at this tournament. So it's all about bankroll management. And we talked a little bit about that earlier. It's the same as the risk reward. Okay. It's the exact same as risk reward. Bankroll management is not risking more than you can afford to lose. In trading, we see it all the time. In trading, why would I want to risk? Why would I want to risk three to gain one? Why would I want to risk four to gain one? It doesn't. We know that we in trading, we know that that's a negative R return, and nobody would ever do that. But people do it all the time, unexpectedly, right? They get into a trade. What happens? They get into the trade. They have not properly identified a stop loss. They hold the trade too long, and what happens? They have a negative R return. It's better that they identify, have a clear stop, right? So if I'm in a short on this trade, it reclaims VWAP. I want to stop out. I want to cut that trade for a small loss. I don't want it to wick up to the swing high to be like, dang, I was wrong. But interestingly enough, people do that all the time because they don't want to take a loss. It's just crazy. And they want to have an artificially high win rate, which means nothing. But bankroll management, without adequate bankroll management, you will not survive. You will not survive in trading and you will not survive in poker. You have to have adequate, you have to have enough bullets to stay in the fight. Okay. So those are my top 10 traits of how poker and trading are pretty much identical. What are your thoughts on that?
Yeah, I mean, it's a lot of similarity, man, especially with bankroll management. That's really important. Um, but yeah, definitely a lot of similarities.
Yep, yep, yep. Absolutely. And that's why at BitProfits we have tools, we have tools to help traders like the smart risk calculator to help with your position sizing. Let me jump in here. You guys can find this in the description below. But being able to come in here and make sure that you don't have a negative R return, to make sure that you are sizing your trades accordingly, we have tools to help make sure that you are based on your account size, make sure that you're not risking more than you can afford to lose to make sure that you do have a positive risk reward ratio to make sure that you have a good win rate. I strongly recommend that you check out and get if it's not ours, make sure that you do have some kind of calculator to make sure that you're sizing your trades correctly to make sure that you can stay in your prop challenge longer, okay, and not blow your account. Ideally, realistically, based on the math, you have a 100K account, your total max loss is 10%, right? If you have a 1% risk, ideally, you should be able to lose 10 trades in a row before you blow your prop account. All too, far too common. I see traders in 2, 3 trades, they blow their account. Why? Because they're risking too much. They don't have proper risk management. They don't have proper bankroll management, right? And this causes them to blow their challenge and then say prop firm trading doesn't work, which is not correct. Okay. But the purpose of this video was just to show you guys that these skills are transferable. For me, like I said, I'm a professional poker player. I'm able to do this at extremely high level. So everything that I'm telling you is not just based on theory, is not just based on my outlook on the market. I would not drive to another city, compete against 1,000 other crushers that do this for the living, and and just say, oh, this is what I think is going to happen. Like, nah, I do this at extremely high level. So I'm telling you guys that these skills are important. And when you develop these skills, when you sharpen your sword of understanding probabilities and how volume works in your favor and how having control having controlled aggression works in your favor, you will now start to have results like some of our VIP traders in our win channel. You guys can come in here and look at our wins channel. Our VIP traders, 6K payouts, 1K payouts, certificates, 5K payouts. You guys will now get results like this um, when you can sharpen your sword. So I strongly encourage you guys to come and check out our BitProfits community. We do have a free floor that you guys can check out, get free setups, learn how to trade better. Check out, we just released our BitProfits Crypto Futures Mastery course. That's also available in the description below. And yeah, I strongly look forward to seeing you guys in our Discord. But if you guys don't have any questions, I will see you guys on the next video. Peace.